Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of the AICPA executives. We'll be hosting today's session. Before we get underway, we just have a few comments related to the events in Washington, D.C. over the past 24 hours. Like all of you, we were appalled and shocked at what occurred at the Capitol yesterday. And what we're thinking about is what our role is in helping the country, helping the small businesses that we've been focused on for the past year, helping our clients. It's clearly a time to step back, to think about how to unify. And it's a very, very important time for the profession, for the firms, for many of you in companies. And what we've been doing here on our town halls is all about playing our very important role in helping, businesses and our clients and companies make it through this very, very difficult time. So that's, again, what today's town hall is all about. We're glad to see that calm has been restored to the Capitol. We've got a team in D.C. They're all safe. So let's get started. Today's agenda: we're going to provide some high-level opening comments. Then we're going to get right in to that very significant release of guidance that occurred last night. And just related to the comments I just made, we want to commend Treasury on getting that package out last night. And we've done our best to review it and to be ready for today's town hall. We're then going to have a panel discussion or tax practitioner discussion led by Ed Carl, and let me just move right into, in a minute, who the presenters are. But before I do that, just a couple of housekeeping items. You all know you can receive CPE. You just need to respond to 75% of the pop-ups, the attendance checks. And you also have a toolbar where you can download materials and ask questions. And please refresh your browser to make sure you've got the latest materials available to you in that resource section. So once again, I'm Eric Auskerson, one of the AICPA leads. I oversee CPA.com, the business and technology subsidiary. With me today is Ed Carl, who leads the tax area at the AICPA. We've got Jan Lewis, who's the incoming chair of the Tax Executive Committee. Carl Peterson, who oversees the small firms area. And you all know Lisa Simpson, who oversees firm services, and her team's been playing a very important role with all of the resources that we have available through these town halls and the broader business relief program. So once again, what we do every week is bring to you the latest information. That's what we're doing today. We're in a sprint week. There's a lot of information. We had a busy final week of the year. So we've been active in some of our discussions with the governmental officials, talking to firms. We had a meeting with a bunch of firms this morning, reaching out to the payroll providers in the lending community. Also, we had a call with them today. So what we're trying to do is bring you the best available information and our best recommendations on how you can move forward with all of this latest guidance. So here's our timeline. And I've got Lisa here, and Lisa's maybe going to, comment with me on this slide. But you can see what has happened. We talked about that last week, the $900 billion Stimulus Act becoming law. And last night at 11:30 p.m., these two major IFRs were released by the SBA, and those were, produced by the Treasury Department. So let's look forward. What we still need some forms. So we think there's going to be additional forms issued over the next couple of days, today or Friday. And then right now, the plan is for the SBA to start receiving applications as soon as Monday. So there's also some particulars about this being opened up on Monday for some of the CDFI, smaller community lending or lending entities first. We will be, staying close to this So that's all I have to say now. For now, we will be continuing to update you via our social media channels as we learn more. Lisa, is there anything that you'd like to add related to the timeline?
Just that we were expecting those two big IFRs. I'll get into some of the details in a little bit, but it's around 125 pages ish, and but they're very well laid out and easy to navigate. So I think that if you choose to get into the IFRs, which are in your materials, I think you'll be pleased with some of the plain English that's in there, some of the organization that's in there, and it's an attempt to codify into more of a holistic look at some of the IFRs that have been released piecemeal over the past 8 months or so. So it's a good thing.
Yeah. Yeah, it was what we were expecting. As you said, 82 pages for the consolidation of the many IFRs of 2020, and then the new second draw IFR. We're going to talk about how we're reviewing this, and we want to support you in this review and enable you to work as efficiently as possible. And this brings us to this slide. We really do think that together we should approach PPP2 differently than how we approached it back in phase one in April of 2020. Back in April, we didn't even know what the PPP program was. There was all kinds of, system issues at the start. There still probably will be some system issues right now with the start of this next phase, but we all have learned so much. We have a huge foundation. And we're all putting in place processes and capabilities that we'll talk more about. We understand some of the issues that occurred with phase one in April or May around things like agent fees. We've got different options for you to think about. And we think this is an opportunity for firms to be even more proactive and to gain clients, and also to think about how best to support the forgiveness process. So Lisa, with that, we're going to turn this over to you, and I'll jump in at times for you to do this 12 hours later, or maybe 15 hours later. But you did sleep last night, so and your team did sleep. I know some people were up at 5 a.m. this morning, so let's get right into it.
We'll start with a guidance from the IRS that came out this week, not last night, but actually yesterday when most of us were still awake. So it just clarifies what we've been talking about on our recorded town halls, that it sets in stone the deductibility of these PPP forgivable expenses. So you've got a link to the to the announcement on this page if you haven't seen it yet, but it is what we were expecting. So good news. Then we'll get into the SBA guidance that came out late last night, late for me anyway. So got up at 5 o'clock, had my coffee, and started digging in. And we mentioned you've got these two sets of IFRs and then some SBA guidance on accessing capital for minority, underserved, and women-owned businesses. If we look at the first one, as Eric said, it basically consolidates a lot of the IFRs that have come out over time, and it provides some general rules relating to loan increases and forgiveness. So we'll talk a little bit about what we know so far. There are still IFRs to come specifically related to forgiveness, so we'll keep our eye out for that, and we'll let you know when that drops. The second IFR is focused solely on second draw loans. And again, the way the IFR is laid out is it's going to identify those main differences between the approach for the first draw and the second draw. Really quickly on the minority institutions or CDFI institutions, the PPP loan applications will, once the portal opens, those institutions will get the first 2 days to accept loan applications. So we've got set-asides within that category, and we'll talk a little bit more at the end about how to support those underserved communities. So digging in to the details, we've gone through a lot of this in the two recorded town halls that Eric and I did, December 23rd and December 30. If you haven't watched those, The replays are available, and the resources are available on the aicpa.org/SBA site if you need those. So I'll go through them at a fairly quick pace, only pointing out some of the new things that we learned from the IFRs. And so we'll go ahead and jump on into that. As we've talked about, the second draw is only for hardest hit borrowers, and it's restricted to those who generally have 300 or fewer employees. There are some accommodations in there if there are multiple locations. One thing to point out is that the last day to apply for either a first draw or a second draw is March 31. So we've got a very defined window of opportunity, and we've got over $284 billion worth of funding in there. So hopefully that will meet the need. For these second draw borrowers, it's going to require that 25% reduction in gross receipts. But what's important is in the IFR that came out last night, we got some SBA thinking around how to calculate gross receipts. So they refer back to an SBA provision that you'll see linked at the bottom of the page. But it's basically all revenue, whether received or accrued, in accordance with the entity's accounting method, that includes sales from products or services, interest, dividends, rents, royalties, fees, commissions, other types of revenues like that. But there's an important allowance for reducing that for returns and allowances. We've talked in those recorded town halls about the fact that PPP and EIDL loans do not, or EIDL advances, both, do not fall into the category of gross receipts. There's a line in the IFR that I wanted to point out just so you don't trip up on it if you're reading it without coffee like I did. If the forgiveness amount of your first draw PPP loan has already hit your books, if you've recognized that as revenue, then just back that out in terms of a gross receipts comparison. That is not included in revenue, either as the loan amount or the forgiveness amount. So again, just to save any panic if you're reading through the IFR there. We also got a borrower simplification, which I think will be well received for those borrowers who maybe have already done or will be quickly doing their 2020 tax returns. The IFR gives borrowers the opportunity to just look at total gross receipts for the year rather than doing an individual quarter by quarter basis. So for a lot of small borrowers, they may not produce quarterly financial statements or monthly financial statements. They may just wait until the end of the year and produce a financial statement. This allows them to use that annual total to determine if there is a reduction of 25% or more. If they choose that, then the tax returns would be the revenue decline substantiation that'll be required to be filed with the loan application, depending on the loan amount.
So and Lisa, just wondering, we got a lot of questions here. Just a lot of questions, Lisa, just on the slide deck. The slide deck is there. We labeled it slide deck, so that might make it confusing. We didn't put the normal naming structure in, so it's slide deck, and it's in the resource area. Lisa, I think this annual option is a great add that Treasury put into the guidance, and then also with below 150,000. The annual tax form will be a great way if you do need to have some documentation during forgiveness to utilize that. So some interesting steps here that have been put in place.
Absolutely. We've talked again about the loan amount for second draw borrowers. So if you've looked at the town halls before, you've seen these numbers. They're just a couple of new things that I wanted to point out. Borrowers can use 2019 or 2020 or 12 months prior to the application to calculate their payroll costs. There was a lot of confusion when the Act came out about that 12 months prior. So the SBA and Treasury have been trying to look through the guidance or the Act, the language of the Act, to figure out how to make it simple for these small business borrowers to apply. So that's one accommodation that they've made. There's an important cap to point out that if a borrower is part of a single corporate group, so if it's a or an affiliated entity or something like that, there is a cap of $4 million on the amount that can be received in the second draw process. We're getting a lot of questions about the covered period for these second draws, and basically there's more flexibility. Borrowers can choose any period between 8 and 24 weeks. So again, positive intent, trying to make it an easier accommodation for our borrowers. So we did get a little bit of insight from the IFR that was released around documentation, what will be required. And if it's a second draw loan, it's going to be about the same as it was for the first draw. If a borrower is using calendar 2019 to apply for their second draw, and that's the exact same information that they used for their first draw, and they're using the same lender, then they don't have to supply new payroll substantiation. So they can just simply use that same number if they're using the same lender. There is a stratification in the amount of the loans in terms of what documentation is needed. For loans over $150,000, the borrower will be required to submit documentation that supports that revenue decline. A little bit of information came out. We'll see what actually shows up on the forms and in conversations with lenders, what they're actually looking for. But tax forms, or if not available, quarterly financial statements or bank statements. For loans of $150,000 or less, Eric mentioned that there's a little bit less documentation for those. The interesting thing about those is that the revenue decline substantiation isn't due when the loan application is filed, it's due when the forgiveness application is filed. The SBA can request that at any point, either before or after the forgiveness application, or if the borrower decides not to apply for forgiveness. And it's a best practice to go ahead and just have that documentation available anyway, because you're going to need it when you're filing for forgiveness.
Absolutely, Lisa. Just like we said before, I mean, you need to, one, have that self-assessment of risk discussion with your client. All of this is going to become, all of this information, who applies and the amount of their loan will become public. So have that discussion with the client, and then do the documentation, even if you're applying for loans below 150,000, or have a plan for that documentation.
Yeah. One of the provisions that we got some insight on last night is how the second draw is actually going to work. And there is a new form yet to be released. So we're already getting questions, where's the form? It's not yet available. Eric mentioned that we're hoping that we'll get those this week so that it's a quick turnaround. But the borrower will need to fill out a second loan application form. Then the lender will take that form, do the due diligence that is required by this IFR from their end, and then submit that through the SBA site. The loan amount is cannot exceed $10 million for an individual borrower or $20 million for a corporate group. And the borrower must provide the lender with that documentation to support the calculation if the loan amount is being increased. So I think I convoluted a few bullet points on my slide. Forgive me, it was an early morning. You've got two processes here. So you've got the second draw, which is that SD form not yet available. And then there's the process of requesting an increase in a loan amount. So if we go to the next slide, I think
that's a good clarification there for this. Yeah, that was PPP, the first, you're doing a first draw, that lender amount. So
I'll clarify that here in just a bit. And again, we wanted to start out asking for some grace and patience since this is all relatively hot off the presses. So if you are going for a second draw, there are some certifications that the borrower is going to be asked to make. These are just some of the certifications. There will be some others, but these are some that I thought were the most relevant. We're getting questions about does the borrower have to have fully used up their first draw before they apply for their second draw. We are not seeing any indication that that's the case. The wording is very particular. It says the certification is that the borrower has used or will use the first draw for eligible expenses.
So at least on this one, you're going to hear from a lot of the lenders that some lenders are going to say, you know, we'd like to have the forgiveness application submitted. That's not how the guidance or the act is written. You need to have used or will use the first draw of the eligible expenses. So there'll be more to come on this, and I'm sure, you know, some lenders are going to leverage this to drive that forgiveness process. But this is what the guidance is.
Thanks, Eric. So we'll quickly run through who the first draw borrowers are. We've got $35 billion set aside for them. I'm just going to highlight that we've added 501c6s, and there are some restrictions around that. They have 300 or fewer employees, and there are some lobbying thresholds that are built into the language of the Act. The AICPA has been working very closely with ASAE, which is the American Society for Association Executives. So they deal a lot with 501c6s to work on getting some clarity around those definitions of lobbying expenses and the percentage requirements there. Some news organizations and some housing cooperatives as well. On some of the other provisions that you can look at to see if they impact you or any of your clients, there's some new rules around Schedule F farmers and ranchers. And one thing that came out in the IFR last night is that Schedule F filers can use gross income instead of net based on either their 2019 filings or their 2025s. The rest of this, I think we have talked about, except the part where I got confused about which slide I was on. So if you're a borrower who returned all or part of your original loan, then there is a process for reapplying for the difference if they have not received forgiveness. That is the bullets that I had on the previous slide. If you're a borrower who applied for a loan amount and then guidance changed and you could have been eligible for more, then there will be a process for the borrower to go through with the lender to document the amount of the additional loan that they're eligible for and receive that loan. So again, good news for borrowers. Long list of borrowers that are not eligible. I'll point out the top one. Most of the others we've already discussed, but an entity that has permanently closed is not eligible for a PPP loan. The IFR that was released talks through the rationale on that. And then this is not a comprehensive list, but some of the more frequent ones.
More clarifications, you know, which is good as we head into this next phase.
Absolutely. We've covered most of this before. I don't think that anything new came out in the IFRs last night around what costs are eligible for loan forgiveness. Just a reminder that they expanded the definition of payroll costs to include group life, disability, vision, or dental. And we have these new categories of costs that are eligible forgiveness around PPE, supplier costs, operational costs, and property damage costs. So again, borrower friendly. So simplified forgiveness, and we're very deliberate in using the word simplified. This is not automatic. There are forms to be filed and certifications to be made. We have not seen the simplified forgiveness form. As I note there, the SBA has 24 days, so they've still got some time to release that form. But these are the things that we expect will be required. Last bullet point there we talked about earlier, but just as a reminder, there will be a requirement to provide the documentation that outlines the decline in revenue to show that the borrower was eligible for that second draw if that was the loan they took. Other provisions, the first one is huge. They're all huge, to be honest with you. But the idle advance deduction is no longer being applied to PPP loans. And in actuality, the SBA has clearly stated in the IOs up. So that's a great relief to a lot of borrowers who received those advances, expecting them to be grants, and then they were deducted from forgiveness. Another big provision that we've talked about is the extension of the SBA making 7A loan payments. It's a 3-month extension, and then for some underserved borrowers, it could be up to a total of 8 more months, and that will not be taxable, and the expenses will be deductible. Idle advances will be coming back, but they're very targeted this go around. So as those portals open back up, we'll get you some details on that. There's about $15 billion set aside in grants for shuttered venue operators, theaters, museums, and some talent managers in those categories. Those are truly grants, but there are some strings attached as to how the operation can use that money. But again, good news.
Yeah, that's great news, and that's going to be important to deliver through these SBA vehicles.
Yeah. I wanted to give you a reference if you're looking for detailed descriptions on those new costs. So you don't have to do a word search through those 5,500 pages. Just go to page 2043 until they get the bill filed into the register. But that'll give you details on those expenditures. So I think we're good on this slide. And then we do include provisions for lender and agent fees. Eric, I'll let you take this one.
Yeah, I mean, this is we've been talking about this for the past few weeks, and this is basically what was in the guidance, and the lender fees are in line, obviously, with what was in the act. The agent fees, it was a little bit more. We've got a question about loans under 350,000, in particular the ones under 50,000 related to agent fees there. So we'll get more specifics on that. But I think our as we always say, assume positive intent, and we think it probably should line up for the under 50,000 similar with a similar ratio to what the lending fee is. There was this one new sentence added: if a borrower has knowingly retained an agent, such fees will be paid by the borrower. What they're just trying to make clear here is that firms need to have agreements with the lender. The borrower can't tell them to be their agent for a bank or a lender. The firm needs to form that agreement with the lenders. They're just trying to be very, very clear here. But we'll continue to make sure we fully understand this as we have discussions with Treasury and SBA. So, Lisa?
I'm going to jump in on a side note. While Eric was talking, I took a glance at the questions. We've got over 1,700 questions so far. So again, let's go back and ask for your patience and your grace. We cannot get all of those answered today, but what we do is we take your questions and we actually filter them through and find the key themes and the key topics. We'll use those to guide our conversation next week and to also help us with the FAQs that we're working on updating. I saw some questions about taxability of the 7A loan payments, and what did I mean by consistent with the PPP treatment? It means they're not taxable and the expenses are deductible. So again, if we won't get to your question today, I can guarantee you that we're not going to hit them all, but we will be looking at those and using them to generate our conversation for next week.
Great, and well said. We've got over 10,000 attendees, Lisa. So we've got a lot of material here. We'll keep going. So engagement letters.
Yeah, this is a super important topic, and I want to thank our friends at Aon and CNA who are managing our AICPA member insurance program. They just released today a risk alert that is a great read on helping your clients with loan application forgiveness, loan application services and loan forgiveness services. They've even provided 2 engagement letter templates. So you'll see in that link additional links to the engagement letter templates. We'll also be adding those to our aicpa.org/SBA site. But just a quick plug for the risk report, please sign up for that. It's a great source of information around managing your practice.
Thanks, Lisa. That was an amazing overview. And we are going to be producing an FAQ document, or updating our FAQ document over the coming days, and definitely by next Thursday's town hall with all these questions that are coming in. We're also, during the month of January, going to have a little bit of a discussion on how firms can, best position their strategies. And this is also for companies related to thinking about, 2021 and go forward plans. Some feedback that we've received on these town halls is that we're always talking about the opportunities. We're talking about how there's this whole new business relief category, or we're talking about other areas that firms can go into. And with that said, we understand that you need to determine what makes the most sense for you to do with your practice. There's really unlimited opportunities and problems that you can solve for your clients. So what we're going to do in a future town hall is talk a little bit more on how to think this through. And actually today you'll hear a little bit from Jan Lewis and Carl Peterson on how they're thinking about the start of 2021. So we got a couple of slides here about some of the resources and capabilities. I'm going to go through these quickly, then we're going to start the discussion with practitioners. The amount of information behind the PPP Act now is approaching 1,000 pages as we enter into the second phase here. So we really are going to encourage firms to leverage capabilities. One of the capabilities that we're putting in place is with a fintech partner. We're building the AICPA calculator and guidance on top of the fintech partner solution from Biz to Credit. And with this second phase of business relief, you have the option of using traditional lenders or fintech. They weren't available right at the start of the last program. And when you really think about what's occurring here, is the banking community and the fintech are just a front end to the SBA in the processing of this business relief. So one question we always receive is, okay, I'm putting in place this centralized process to support all of my clients' applications. So you determine, which ones of your clients are going to be eligible for a first draw or second draw, and then we're recommending you centralize this with a tool. And then you're either going to go down one of two paths. You're going to go down the path of supporting your client with their original lender, or potentially using an alternative lender. And this is just how it's going to work out over the coming weeks. We think there's a lot of value to have a centralized way to kind of put together all those documents that Lisa was just describing, and having a good cloud-based retainer of this information, and then offering options as described on this slide. So here's just a little bit about the CPA loan portal, something that we've been working on since June and July of this year, just to be prepared for what's happening right now. And I can tell you, people are working around the clock supporting the updating of this platform with this most recent guidance. But this platform had already been set up based on the passing of the act on December 27th. So here's a leave behind for you, just describing some of the key value drivers related to this solution. And we do have separate standalone webinar training sessions on it. And we have also a 1-hour recorded webinar, which you can go, access at cpa.com and watch at your leisure. So with that, I'm now going to bring up Ed Carl, and Jan Lewis. So I see Jan and Ed. Ed, welcome. There you are. We've got a lot going on outside of just this business relief. So look forward to having you, clear this information for the town hall.
Thanks very much. Jan?
Thanks, Eric. Ed has put together great topics on these slides, and thanks for everything you guys are doing on the PPP front. I think the purpose of the next few slides is really just to talk about tax-related topics that have to do with the CARES and the recent legislation and what the Tax Executive Committee and the tax section have their sights on. A couple of quick topics. I'll just jump right in those first two and then turn it over to Ed for a few others. Just a reminder for practitioners that in addition to PPP in the recent act, there was also extensions of payroll tax credits for small businesses. Probably the one that's getting the most attention is the employee retention credit, which is the second bullet there. The first bullet is just a reminder that paid sick leave and family leave for employees who are affected by COVID, have to quarantine or infected, or have children that they have to take care of. Those are still there for the first quarter of 2021. They're not required. An employer is not required to provide that, but if they do choose to, there are payroll tax credits available just as in the original Families First Coronavirus Response Act for 2020. And in areas such as our area where we are seeing an uptick in COVID cases, we're seeing more employers and clients asking us about that. So that's still available. Remember that for your 941s for first quarter. The employee retention credit is getting a lot of attention, and it has definitely been expanded for 2021, but also in this most recent act, the most important thing is it actually went back to 2020 and said, even if you took a PPP loan, you can now take that employee retention credit. That is a valuable payroll tax credit. Any quarters in 2020 that you would qualify for that, you can take that credit on the fourth quarter 941. And as practitioners, we just need to be aware of that. Remember that employee retention credit is there for businesses that have had a significant drop in gross receipts, at least 50% in 2020 and even more than that in 2021. But yet they still have employees that they want to pay to be on staff. So those are just two. They're payroll tax credits, but they're things that our clients ask us about. And as a CPA and a local CPA firm, these are the type things that we get bombarded with, in addition to some of the income tax and busy season questions and PPP. So I think Ed's going to cover the next couple topics on PPP. I guess we got exactly what we wanted with the PPP expense deductibility, but of course, that can bring up other issues. So Ed, you want to cover that?
Yeah, thank you, Jen. We did get exactly what we wanted, and the most frequently asked question, I believe, of last year was about the deductibility of PPP loan forgiveness related expenses. And so with a lot of effort by a lot of people, Congress did insert that deductibility provision in the relief legislation at the end of the year. But of course, we immediately got additional questions from our members about basis issues. So if you have the expenses in 2020, for example, but then you don't have loan forgiveness until 2021, for flow-through entities, you do have a potential basis issue there. So we do need some guidance from Treasury, but I want to point you to an article that was published in the Journal of Accountancy on December 27th. There's a hyperlink on that third bullet to the article. So I'll point that out as a reference to you. That will explain in a little bit more detail. The next bullet, Lisa did mention that earlier in her presentation about that brand new revenue ruling 2021-2 that just came out that obsoletes the two rulings from last year, that notice 2020-32 that came out in May, and the Rev ruling 2020-27 that came out in December about the deductibility issue. So that's fixed by legislation, and IRS basically withdrew or obsoleted the notice in the revenue ruling that they had from last year. Jan, you know, as vice,
I just said we're saying that's finally settled, right?
it's finally settled, and then we'll get some more information on the basis issue. But Jan, you know, I started to say, as chair of the Tax Executive Committee, you've been heavily involved in the work as we continue to make sure that IRS understands that their approach to the penalty process should be with flexibility and compassion. We've done a lot of work in that area, and we've had a lot of questions about that as well. So if you would please just describe where we're at with that situation.
Yeah, I wish I had an answer. I wish I had all of the answers that practitioners want and need right now. I think what we can say is the Tax Executive Committee and the AICPA tax section does have this as a priority. We know that practitioners and clients have just been through a terrible 2020, and that filing season seemed to never end, and here we go into another one. And one of the casualties of that was some late filings and some penalties, whether it be for pass-through entities, late filed returns, payroll taxes, or other things. You combine that with the mailing problems and other issues with the IRS processing, and we just ended up with a lot of notices, whether it be mailing problems or penalty issues, and then how to respond to those. We do know that the IRS, and I think that is also hyperlinked in that fourth bullet, or fifth bullet, we know the IRS did post something to their mission critical page just a couple of weeks ago. That hyperlink is really great. If you link on that, it'll take you to the IRS website, the page on the website that talks about mission critical functions, and also what to do if you get a notice, or what to do if your check hasn't cleared. That's really good information for us to have for our clients anyway. But on the section about what if you get a notice updated December 16th, if you drill down, there is a paragraph there about the IRS conceivably offering reasonable cause penalties if you were late due to the pandemic. And that certainly gave us hope. They should be able to take that over the phone. We are having struggles with that. We are not having a lot of success, but we're trying, and we are going to keep working with that and keep communicating with the IRS. And I think Ed has always mentioned to us that if practitioners have trouble with this particular case of 2020 penalty relief on late filed returns or late filing or late payment penalties, let Ed know, because the only way we know how to respond to our members is if we know what the issues are. So while I probably have a laundry list, and Ed hears from me a lot, he probably would like to hear from other practitioners as well. Ed, did I kind of cover that? I think we're going to also come up with some resources on that topic.
Yeah, there is a resource already in the materials that's available today. There's a COVID-19 template letter that our members can use to ask for abatement that was prepared by our tax section. They are also working on some additional resources, and then I think an article that will appear in February, but some additional resources that will come out before then. Jan, as you and I have talked about some of your interactions with IRS, one of the things that I learned from you is that if you do receive a collection notice, for example, a client receives a collection notice, by calling the IRS through the practitioner priority hotline, at a minimum, they will put a hold on future notices until you can work through the situation. We know that there is a long backlog in the mail, and that's really not helpful. So that's something that's really helpful for people to know that always make that call so you can put a hold on the collection activity.
Absolutely. And we could talk about payment and penalty relief all day, but I know we have short time here. So we'll move on to the next couple of bullet points on our slides here. The tax due dates, it'll cover this. I'll just tell you as a practitioner in a local firm, again, it's been a rough filing season. It will be a rough filing season, but we are approaching this as the due dates being what they are. And we are working toward that, and we're sending a newsletter out to our clients. As a matter of fact, I think in the morning, basically stating this, that as of now, we don't have any postponed due dates. We're concerned, we're staying concerned, we're staying on top of it. We want to see how these next couple of months go. But for now, we're dealing with what we have. So, Ed, did you have anything else on that topic?
No, I think that's an important point to approach March 15th, to approach April 15th exactly as they would stand today. As we know it, IRS doesn't have any plans to change that. We do have a meeting with the commissioner, and this is one of the topics that we'll be discussing with him. Frankly, the penalty situation as well will be a topic of conversation in the next 2 weeks or so. There is a link on that tax due dates bullet to a blog that I wrote several weeks ago about the situation. As Jan said, she and I speak quite frequently, but I do speak with many other members who reach out to us. I get a lot of email and call all of them so that I can understand the situations that impact them. As you can imagine, we have a really diverse membership. Everybody believes that different things, due dates should change, due dates should stay the same. It varies by part of the country. It varies by how heavily they're impacted by COVID-19. Frankly, we are following the situation every day. We understand, and Jan alluded to it, about finishing a rough filing season, a really rough year, a busy year. Lisa and Eric are talking about PPP loans. We have a lot of work ahead of us, all of you. So we're familiar with that. It's important also to follow how the IRS is dealing with their abilities to deliver services, to work through their mail backlogs, et cetera. So that's an important point to all of everything that we're dealing with that we just don't know. But right now, keep to the current deadlines, and we'll follow things on a day-to-day basis. And an important point of that is state conformity, where we didn't have 100% conformity last year when IRS changed to July 15th. And we expect conformity to be a lot less because of revenue concerns at the state level.
Absolutely. Yeah, there are a lot of yeah.
Yeah, so now I know we got some of the Biden items coming up here, a couple of other slides here, then we're going to move to Carl Peterson. So just you want to move to kind of some of your reflections related to how you see things, moving forward?
Sure. Real quickly. Thank you, Eric. So there are resources available about the new tax act from the tax section. And then just wanted to mention, thank you, Eric, and just mention about the recent developments. We have now a 50-50 split in the Senate. It will be controlled because of the vice president. So we'll have the presidency, the House, and the Senate controlled by the Democrats, but the margins are really slim. People have been asking about the potential for tax legislation, and I would expect that there won't be expansive changes this year. The focus of Congress and the administration, certainly at the beginning of the year, will be on the economic conditions and additional relief. There's a possibility of maybe some tax pay-fors, and we also have looming in the subtext of everything, record deficits and The record debt that we're facing as a country. So something has to be done in terms of cutting expenses or raising revenue. So the Biden campaign did have information about some potential revenue raisers. Those are on the slides, and then maybe some possible tax cuts. So on the next 2 slides, you'll see that, and I'll pass that back on to you, Eric. It's available for participants to look at.
All right. Well, hey, thanks, Jan and Ed. A lot of great questions coming in on what you shared. Here's some additional information related to looking forward. So we're going to close out here with Carl Peterson providing some perspective. We call it the Small Firm Corner. He leads this small firm area for the AICPA. So Carl, welcome. And I know you've been talking to a lot of firms as they closed out the year and started 2021.
Yeah, no, thanks, Eric. I appreciate it. I can tell you from my past experience, the beginning of the tax season, this is a different year, but beginning of tax season was always an exciting time, before the work really starts and client expectations begin to take its toll. And I tell you, I was so excited until about March 15th every year, and those last 4 weeks are just a killer. But, with 2020 behind us, I think we're all optimistic about what this year is going to bring. And so this is the best time to be planning and preparing for a successful 2021. And I think the strategy is pretty straightforward. Be intentional. How do you want the year to go? Be proactive. Plan it. There's a lot of opportunity that's sitting right there in front of you. And so, the question is, how do you really best position your firm for a successful busy season? And earlier today, there was a replay of my keynote presentation with Intuit V Conference on how to avoid a tax season meltdown. So let me give you a couple of ideas and things that I think you should probably be looking at doing. You know your clients. You know which ones you extend each year. It's always the same people year in and year out. Let them know you're going to file an extension again. In fact, I'd probably start it right now. Put it in their engagement letters and start filing the extension request and put it behind you. If you get ahead of the game, you can always prepare the returns early. I think you'll be surprised at how you and your staff are going to feel. It takes the pressure off right away. Don't wait until March 15 or April 15 to get those extensions in. Another way to provide relief for the season as you start up is to fire some of your clients. I know it's hard to do, especially this time of year, but our PCPS team has an Excel worksheet to help you rate your clients, pretty comprehensive, so you can make a data-driven decision to let your clients go. And I think now is the time to do it before the season really gets started. I'll tell you that the #1 driver for me when I would fire a client when I was in practice, it was based on the stress that I felt clients inflicted on me during the tax season. I would make notes on a Post-it and put it on the bottom of my monitor. One of our clients stressed me out, and we called that termination row. Then I take each Post-it note and decide if the stress is really worth it. And you have clients that pay really well, but sometimes you really look back at it and you go, is that really worth the stress and anxiety? And once you terminate that client, staff always says, well, it's about time. I can't believe you didn't fire that client last year. But PPP is so hot and heavy. I think we'll jump into the top small firm issues related to PPP. And I think, it's important to understand the guidance, but it's really, I think, why many of you are here today. I know a number of small firm practitioners over the holidays were reaching out to me and telling me how excited they were to be tuning in for the first town hall of this year. You should also have your staff attended as well, so get them registered. I would also download the slides and use them as a reference. There's a lot of information, especially today, in the slide deck. And then, of course, also visit our AICPA.org SBA site for the latest on FAQs and guidance. We update that as soon as possible and as often as we can when new clarity and guidance is released. So, we all went through the first round of PPP 1, right, last year under the CARES Act. And so now as you move into PPP 2 and identifying clients that maybe would qualify for a second round of draws. And I know a lot of firms have already done this. Some have told me that many of their clients do not qualify for a second round of funds. The revenue didn't drop enough. But many do qualify, and time is important to identify them as soon as possible, as the SBA will be opening soon for loan applications. I'd get on top of this right now. Clients want to know if they qualify, and the clock is ticking. And of course, as you look at helping clients get the loans, you do have to consider the banking relationships, much like Eric referred to a few slides ago, that you have that. You know, you have a client, you have a banking relationship with your client has a banking relationship. But you know, knowing clients that I had, many of them want to move fast, and not all of them would feel they have to go through their bank. They just want you to help them get a loan as fast as possible and let them know what to do to get there. This is where the CPA loan portal actually comes into play. It really absolutely streamlines the process. I know many small firms were frustrated with some banks not paying agent fees last year. And I know that's not the focus of the CPA loan portal, but it does pay agent fees if you register for the Premier or the Enterprise version. And really, if you look at it, it only takes 2 PPP loans to more than pay for that Premier version. But I also know it's not all about agent fees. The value to using this loan portal is the process. I mentioned a minute ago that there are things you can do to prepare for a successful tax season and take pressure off of you and your staff. When you think about the back end of the PPP process, the loan forgiveness process at the end of your client's covered period, I would want to be ready. In the portal, most of the data you need to apply for forgiveness is already in the system. At the back end, essentially, all you would need to do is follow the portal guidance, upload supporting data, have the client sign off, a much faster, streamlined process that takes pressure off of you and your staff. And finally, I just really want to be clear that you can and should be willing to bill your clients for the advisory and consulting you are doing to help them through the pandemic and through recovery. One option that I know some firms did during PPP-1 was to charge flat fees related to helping the clients understand what their options are, tracking their PPP funds, payroll and related eligible expenses, tracking cash flow, and final reporting. You can determine the best strategy that really works for you. So now's the time to get planning for 2021. I think there's a lot we can do to be prepared and be successful and take the pressure off. And Eric, I think I touched on the post-application process in some of my comments already.
Hey, Carl, that was fantastic. I see a lot of great comments coming in on some of the tips you're offering. I also want to note that we have heard there's been some audio and freezing of screens. I just encourage you to do a refresh, and we will always be checking our platform and making sure it's working as intended. So we're going to move now to close. We've got all these questions coming in, but Lisa and I are going to review the resources. So we all know the role we're playing here with the clients. One thing that we're with this next phase of business relief, opportunities for firms to support more of the smaller business and underserved. So some resources here on that slide. We think these added capabilities are going to really help all of us support some of the smaller businesses more effectively. So here we've basically had an open forum throughout, and we're gonna kind of highlight our resources in the last couple of minutes. I want to thank Ed, Jan, and Carl for their participation. Lisa, this slide highlights all of the most recent town halls. A lot of you are leveraging the AICPA TV. You can we'll be posting the archive for today up later tonight. Please share that with others. Definitely a resource that you can leverage. I saw a question coming in about the URL for the AICPA's Resource Center on PPP. It's aicpa.org/SBA. A lot of materials are in the process of being updated. And we also have the loan portal that you've been hearing about. Quick comment here. We always try to bring you some other updates. .cpa, this is a very important domain, is going to be open for individual licensed CPAs. It's been available for licensed firms starting on January 15th. Individual CPAs can register their domain. We're going to stay in touch with you over the next couple of days and in the coming weekend with social media. So that's where you'll hear more from us on these forms and any other information that we receive and any other resources that we post. Lots of other upcoming learning opportunities here for your reference. Areas that you want to do a further deep dive, such as AICPA's federal tax update, which is occurring next week, and another tax update the following week. So a lot of good resources. Here's another good tool to kind of think more strategically about your advisory services. You can find this at future.aicpa.org. So here we are. We're at the conclusion. What a town hall we've had today. Thanks for your time. We're going to have another town hall on next Thursday, June 14th. We'll continue to digest all this guidance. There's going to be more coming out, so we'll be digesting the latest guidance and also talking about some of these other topics. One thing that we heard a lot about today was ERC, and we're going to be doing a deep dive next week on ERC. So Lisa, any final comments from you before we sign off?
I just want to follow up on that ERC comment. We have a committee actively working on a lot of the interplay issues between PPP and ERC. ERC is going to be a great opportunity for some relief for your small business clients or for your firms. So we are actively working on developing out the suite of resources. I've got a call later today to go through that and to start digging into some of those questions. So thank you, and we will definitely be talking about that more in the future.
So thanks to everybody who put on today's town hall. Let's get a great start to 2021. There's plenty to do. Once again, we appreciate being with you. Look forward to seeing you next week. That's all for now. Thanks a lot.